Good morning, good morning. How's everybody today? Good Friday morning. Week is coming to an end. How's everyone today? Hope everyone's doing well. Jason, Justin. Righty. So we're just coming on to 9 o'clock now, so we'll just give a little others to join in. There's 2 people, 3 people, 5 people, doesn't matter. Regardless, people are missing out. Oh, that's too bad for them, right? The word is spreading though. If you guys wouldn't mind liking the video and even sharing it. You got social media. Everybody's got social media these days. If you wouldn't mind sharing this video on your social media, that would be appreciated. That way we can get the word out to traders just like you and I. Get our minds all in the same place. Avoid catastrophic losses. We can all do better. It's together. So we'll start going through what we're seeing in the markets very slowly. Hey, Paul Gardy, nice to see you, buddy. I'm just looking at pound here before we started. And switch over to gold. Now, if you remember last week, we had NFP data came out. Remember that? And well, actually, we could switch over to Euro. Say we had NFP data that came out last week, and it was negative. Why was it negative? Well, because even though there was an increase, it didn't match or it didn't reach the amount that was expected by so-called expert analysts, and so therefore was considered to be negative. So what took place with price? Do you remember what took place with price? It dropped. I have it mapped out here on the chart. It dropped. Okay. And why did it drop? Was because it was the data was negative, so it was expected to drop, right? So price dropped, and that was in this area here. Right down here. I marked it up. That was the drop. Okay? So it dropped right back into an area of institutional buying. Right here. Okay? That's where it came and dropped into. And so let's take a look once again at the positions as of this morning. See what retail traders are doing. And see if they have added to their positions. So just looking at the euro, we don't have one. Just looking at the euro, we can see that that is where we're at right now. Okay, it's almost 50-50. Yesterday, I believe it was more bearish, correct? More bearish. Now a little bit more longs are coming in. So what I'm seeing here is they definitely lured in traders. Okay. So if they're more short, they're more long the dollar right now, which is not too bad. More long. But I'm wondering if they were getting in long up throughout here before price dropped. Not too sure about that. I didn't check what the dollar or what the euro was at that time. But nonetheless, what did we say last week in regards to the NFP data dropping price down? We said based on the dynamic of what was taking place on the chart, what was likely going to take place is price was going to drop and then reverse and start heading upwards. So that's what we're seeing right now. And that's primarily because we have institutional demand here that is now being contacted a second time. And if you look above the chart, there's nothing here. Okay? Until this supply up here. So remember the idea of cutting through a forest. If there aren't any obstacles, then you're not going to have anything that's going to stop you or prevent you from there. Now, could there be a change of the dynamic on the dollar and we see price turn over and head lower? Sure. Sure, that can happen. All right. Considering what's been taking place on the multiple time frames, there isn't anything very strong to dictate exactly where price is going to go. This is where experience kicks in. Experience has to kick in and give you some kind of an edge as to what will likely take place, just based on, the overall look of the markets and, from your experiences. So my hunch is that we will see price continue to the upside over time. So that'll probably lead into next week. So far as I'm concerned, this week is pretty much done. And so this week was all about continuing the drop to the downside that was begun, that started with NFP data, the negative data, to come down and contact demand for the banks to buy and reverse price up. That's how I see it. So all those traders who had some suspicion that this was going to continue lower like this are now holding those positions and starting to get out. So here's on the 4-hour chart. Okay, came down, and they were thinking something like this was going to take place. But it didn't take place, and now it is starting to build pressure to the upside. And from what I am seeing, this downward move was caused by retail. This upward move is caused by the banks. Okay? Because nothing's fueling this move up like this. Not according to any data or anything that I've seen. So this move up has to be by the banks. And considering the fact that they are contacting an institutional area of demand, it has to be the banks that are responding from that demand and causing price to go up. So now we are seeing that move. And there we go. We have supply located higher. And as you can see, there's nothing in this space. This is like a big void. So to fill this void and cause price to head up, there wouldn't be much to stop that from happening, from what I am seeing. Could be wrong, but from what I'm seeing, I don't see any reason why that wouldn't continue higher. All right. Now the question is, how high is it going to go? Well, it really does depend because, when we're looking at the different time frames to determine what is likely going to take place, I think we mentioned this before, right? Using the windows to determine what is likely going to happen, okay? Whether we have a go or a no. The monthly chart is really on standby right now. There isn't anything very strong dictating that price is going to go down. Now, I mentioned this in the past that price is likely going to go down because of all the institutional areas of supply that have been formed on the chart. And when we look at the areas of demand, we had one down here that's already been contacted. Okay, and this is the second contact of that demand. So we have demand twice contacted, supply only once contacted. So when it comes to supply and demand, it's whatever zone has been contacted the least amount of times, that is what is in favor. Okay, if price rallies all the way back up there to that area of supply, then it would be a second contact of that supply. But the interesting thing that I will point out is on the weekly chart, we have this area here of supply. So if price contacts that monthly area of supply, what will in fact be also happening is it will be contacting this area of supply on the weekly chart. Now, I will also point out that when price came down into testing this area of monthly demand for the second time, I will point out that there wasn't any sort of demand down here, the weekly chart that price reacted from. So that's another piece of evidence to add to the overall picture of what's taking place here. If price rallies up to the monthly area supply, it is backed up by supply. This second test of monthly demand was not backed up by weekly. So that tells you, if you had to, weigh out the benefits or the strength of a push to the downside versus the strength of a push to the upside, definitely what's leading on these charts is there's more strength to the downside than there is strength to the upside. Okay? And that is mid to long term. So mid, many days, many weeks, and long, many weeks, many months. The strength to the downside, more long term, I'd say, than mid, because mid, if price rallies, it's going to take multiple weeks to get up there. All right? So long term to very long term, price is more likely going to be dropping. Okay? Short term to midterm, okay? Midterm being many days, many weeks. Days and weeks is what it would take for price to get up here. Days on the daily chart move up. Why? Because we have demand that's in play and nothing to stop price from moving up. So short-term forecast is up, mid-term forecast is up, long-term, I would say, many weeks, many months, potentially up. I say potentially because we could come up, fall short, and then start to roll over. That's definitely something that can take place. There wouldn't be any rhyme or reason for that to happen, but it's a possibility. Okay, there's a strong possibility for that to happen. Okay, based on the dynamic. And these are things that we've covered many times in level 3. We've explained in much detail how we can, in certain circumstances, we can expect certain movements to happen, but in other circumstances, we can't expect certain things to happen. It all does depend on what is taking place on each individual chart. All right? So to the upside on the dollar, yeah, it's definitely something that we can see coming down. Now, when we look at gold, let's see what we see here. So gold, we had mentioned, contacted some supply here on the daily chart. And then created a bearish engulf. Bearish engulf is strong. Very strong. Why? Well, because when you look at the very essence of what a bearish engulf is, it's price action consolidating and then breaking out of that consolidation and heading to the downside. All right? Now, we know when we study supply and demand that consolidation can mean a few things. One is that price is, or the institutions are offloading a position, meaning they had accumulated a position somewhere, and now they're offloading that position, and that's why they are keeping price in a range. Or they could be accumulating a position in preparation for the bigger move. So in this case, bearish engulf accumulating a short position in preparation for pushing price to the downside. So is that what is taking place now on gold? Potentially. Potentially up there at those highs. We could look for signs of that. Let's see if we can spot any evidence of that. Let me go over last week's data. Here we are. So remember, we were somewhat here at those highs, right? With that green candle to the upside, before the shift to the downside. And what do we see here? An increase from 73 to 75. So increasing short positions? Yeah, I'd say so. I would say so. That is basically backing up what we are thinking here. Is an increase in short positions as price contacts supply. And then we got the bearish engulf, the big selling. Price comes back up to that bearish engulf area, which is pretty much the area of supply that we have located here on the 4-hour chart, and tests it, comes down, tests it, comes down, likely to drop. Okay? Why is that? Well, let's do the analysis. We got supply being contacted here. We got supply being contacted here. So these are the daily and 4-hour charts. Supply is in play. So when we think about short term, we're thinking about multiple hours, multiple days. So short term, the pressure is to the downside. Midterm, we're talking about multiple days, potentially weeks. Now, I would be cautious with saying multiple days, potentially weeks, because if price was to decline, there would be this area of demand. It doesn't take many days for price to get down there. It could take a week or two, but I wouldn't say many weeks. So I would stick with saying that the short-term forecast on gold would have to be to the downside. Now, is that a high probability forecast? Not really. And why do I say that? Well, because if we had trends that were down and the momentum was down and supply was in play, then the forecast being to the downside would be very high probability, because that's the direction that price wants to take based on what the institutions are doing on the multiple time frames. But in this case, we can't say that because, if we look at the monthly chart, we see that we have institutional demand in play. So we know that over the very long term, price is going to want to go up. When we look at the weekly chart, we have a situation where it is like this. Okay? Yellow. We have to have caution with this chart. Why? Because we don't currently have supply in play, and we don't currently have demand in play. It has not been contacted. We are sitting in the middle of the ocean, and the wind has died down. Yeah, we get little winds to the downside every once in a while, which is causing these bearish engulfs in the lower time frame. But we need a long, substantial wind to push price to the downside, right? If we were a boat in the middle of the ocean, you need a very long, substantial wind to cause the boat to go in a certain direction and sustain that movement. So it's the same thing when you're looking at the charts. Just think of it in those terms. Short-term winds come into play, which push price to the downside, but are those winds going to be sustainable? Tough to say, because we know over the longer period of time, what we are expecting is this on the monthly chart. So we know over the longer period of times, the winds are going to be blowing north. Right? Within those moments where the winds die down, we can get short-term winds blowing to the south, but those are only short-term. We don't know when they kick in. We don't know how long they'll stay. So that is the inherent risk with the forecast, is because these moves to the downside can quickly and abruptly end at any moment. And when the banks feel it necessary to continue price to the upside, they could do so whenever they choose to, based on these dynamics of what we're seeing. But, just to put something out there, I would say that based on what I'm seeing, on the daily chart, we could reasonably expect a move to the downside. Now, would I want to take shorts on gold? No, I would not. Okay? I would not want to take short positions. And I get that asked a lot, where I will give out a forecast and say, well, look, all the trends are up but price is likely going to retrace down to areas of demand, and in those areas of demand, I'll be interested in purchasing or getting in long positions. And the number one question I'll always get is, well, if you're expecting the retracement, why wouldn't you short? And I know it sounds like something very simple, but the thing is that the probability of price going up once demand gets contacted could be extremely high, but the probability of the drop down to that area of demand could be low. So as traders, we are only looking to invest in the markets when the possibility of or the probability of that trade working is high. If the probability of the trade working is not high, you do not want to take the trade. The reason being is because a couple reasons. Number one, because over a long period of time, you're going to find that you're going to lose more often on those trades than you're going to win. And at the end of the year, when you're calculating, which trades made you money and which ones didn't, you're going to see that the ones that made you money, they played out extremely well, just as you forecasted, without any issues and without many obstacles for your targets to get contacted. And then when you review the ones that didn't work, you're going to see they were the ones that weren't the highest probability. And then if you just remove those trades that weren't the highest probability and you look at the returns that you made after those losses were erased, the returns are a lot better. So that should lead you to suspect that if you just focused on the trades that are doing well for you and not focused on the lower probability situations, then your account would do extremely well for it. So yes, I'd say that on the daily and on the 4-hour, we expect price to drop down. Weekly, being cautious about it, and on the monthly, we expect price to go up. So this is basically telling you that if I had to open up a position and only hold it for a week, I would probably go short. But if I had to open up a position right now and hold it for many months, if not years, I would have to go long. Okay, I'd have to open up a position long, knowing that price could drop, and there's a better probability of it dropping than going higher. I'd have to know that, but I'd be okay with that because I know that over the long term, price is likely to go up than it is to go down. All right. So that's what I'm seeing in terms of gold. It's looking pretty good. Potential move down, like we were saying, and that's in line with what we're seeing with the euro. Okay, it's very in line with what we're seeing with the euro. As you can see, price is dropping, and again, this was to be expected. Why is that? Well, we had that movement up here from NFP. And what did it do? It contacted an area of supply. Right? So after price had dropped here on the daily chart, this is NFP that caused price to come and contact here. Do you think that was a coincidence? Not a coincidence at all. Okay, dropped into demand, price rallied up, contacted supply, and now the banks are coming in. So the banks took control here, and the banks took control here. Okay? What would be interesting to see, I would like to see right now, just out of curiosity, what's the current news on the euro? And see what they're saying with the euro. I would just love to know what the news is saying in regards to the euro. So let me just take a look and see. Okay. Euro US dollar price. Okay, let's take a look here. US dollar price action setups. Looking to break higher. EURUSD and Aussie USD looking to break higher as pound US dollar. Looking to break higher. All right, let's see. Break higher. That was 4 hours ago. Why would they suspect that price is going to break higher? Dollar weakness following US CPI has allowed Euro, Sterling, and Aussie to make headway over the past 24 hours. Wow, nice picture, eh? Flicking cash in your hands. Isn't that kind of like subconsciously telling you, buy the euro and you'll make money? Is that just me? Am I looking too much into things? Or when you look at this, dollar weakness following US CPI has allowed Euro, Sterling, and Aussie to make headway over the past 24 hours. And then a guy flicking cash. It's almost like go long if you want to make money, right? It's kind of like that. Euro US dollar daily forecast. Euro declines ahead of ECB interest rate. That was a day ago. Price analysis struggles below 122 inside falling channel. It struggles below 122 inside falling channel. Wonder what time frame that was being looked at. An hour falling channel. Oh, you'd have to go down. 15 minutes. Struggles below. Kind of gives you the impression that it's going to be reversing, doesn't it? Anyways, waste my time on that. Let's see what else we got. Euro forecast, price outlook stable. Price forecast, Euro gives up early gains. Okay. Just saying what's evident. Euro US dollar price prediction, double top or ready to pop. Double top or ready to pop. I think the important thing is June 9th. What was happening June 9th? Let's take a look at that. Custom range. What were they saying June 9th? Because that's when price was contacting supply. So price was contacting supply. Next hurdle comes at 122. Euro continues to reach higher. Euro continues to reach higher. And this is as price is contacting supply. So price is contacting supply and you're getting news that is saying Euro continues to reach higher. Sounds very bullish to me. Price analysis portrays bullish flag around 122. Bullish flag around 122. So remind me, bullish flag. What are we talking about here when we're talking about bullish flag? What is expected after a bullish flag? I gotta look it up. A rally, price consolidates, right? Creating the flag. And then what is to signaling a move higher? Yeah, I thought so. Investopedia. Bullish flag formations are found in stocks with strong uptrends and are considered good continuation patterns. Okay, there you go. They are called bull flags because the pattern resembles a flag on a pole. A pole is the result of a vertical rise in a stock, and the flag results from a period of consolidation. The flag can be a horizontal rectangle, but is also often angled down on the prevailing trend. This variant is called a bullish pennant. Okay. So there you go. Bullish flag formations are found in stocks with strong uptrends and are considered to be good continuation patterns. All right. So bullish flag at 122. That means up, flag, and then an up move. So what do we see now? Price is dropping. So interesting how price enters into an area of supply where the banks are planning to take control of price and drop it, and then you have analysis telling you that it's a bullish flag, which is a bullish signal. Well, if you would have started buying, you would have taken the opposite trade of the banks. You would have lost. Again, dollar clings to recent bounce ahead, euro bullish continuation or deeper retracement. They didn't know, so they just asked the question. Makes the break above 122, but only for next whatever. Has to hold if the buyers are to keep some control. And you know what's interesting too? I always notice this, that when you read the news about price, they always talk about a battle between buyers and sellers. They never say it's a battle between banks and everybody else, right? It's always the bulls are coming in or the bears are coming in. They're always making it and giving the impression that it's your average people trading, but some are bullish and some are bearish. Yes, to a certain degree, but that's not why the market moves up and down. It's banks versus everybody. And amongst those everybody's, there's some that are bullish and there's some that are bearish. But if the banks are bearish, guess what? Price is dropping. There's no way that anybody else is going to cause it to do anything different. Euro US dollar outlook shifted to neutral. WTI, okay. Let's take a look at one more and see what else we can find here. But again, presses on the supports. Canadian dollar, let's see, euro flat as attention shifts. Ranking CPI breakout potential. SP 500, euro US dollar, USCAD, pound US dollar, ranking CPI breakout potential. Again, all things that are pointing in more of a move to the upside. All right, well, we've seen enough, I think, right? As price was contacting supply, it dropped because the banks took control, but the news was telling us that it was going to go. Yeah, the flag burned, didn't it? Well, if you were actually following what was really taking place on the charts, you would have known that with a higher degree of certainty. We spoke about this, we talked about it, and it's not that I have a crystal ball. How would we know this? Well, it's because when you study the charts and you know what the banks are doing and how they move price, you know that there are certain likelihoods of price to do certain things. And that is what we were seeing. And same thing, NFP causes price to go up, everybody gets excited, and then they have all that good news, bullish for the dollar, bullish for the euro, after you already got in, right? So when it's now reaching those highs, you're reading the news, it's supporting the positions that you have. You're thinking maybe I should add more since all the news is saying that it's highly likely going to continue going higher. And then you do that, and guess what? Now you're losing in all those positions with this drop. So, not very good. Let's take a quick look at oil. What's oil up to? We were talking about the potential for a continued move higher, but we have to be aware that we also have supply that is in play. So we can see that now, supply being in play. So it could take some time until this plays out. So I'd prefer to not really focus on that. The Aussie US dollar still sitting, has been for quite some time. So we are sitting inside some institutional supply. It's been sitting in there for some time now, and price is just ranging on the other time frames. So it is going to take some time until this breaks through. I think we mentioned it the other day, where we have supply here and we have demand here. And from how I see it, to determine a short-term move or mid-term move, we need one of these obstacles removed. Otherwise, it can do anything. Short-term, it can go up. Short-term, it can go down. Right? There's no rhyme or reason for what price is going to do. So if this breaks or this breaks, then we know with higher degree of certainty where price is going to go. Because if it goes down, then it's testing this area deeper. What do we know to be true about areas that have already been tested? Likely will break, which will cause a drop, and that will facilitate this type of move. So if demand breaks here on the daily chart, then short-term move is down. If weekly demand breaks on the weekly chart, longer-term move down. That's how we would go about forecasting this chart. So we need those things to take place first before we can forecast. At this point, it's any type of forecast you make would not hold much ground on this one until the banks make their moves. When the banks make their moves, then we know. If the banks don't make their moves in this situation, we can't know what's going to happen. All right, 934. So the basic wrap up, I would say, for this week is like I said, always know the theme of what is taking place. Just like if you watch a movie, you want to understand what the theme of the movie is, right? The whole idea behind what to expect. And so the theme of this week was the banks coming in, taking control of price after NFP lured retail traders into to opening up long positions on the euro, short positions on the dollar. So the theme this week was to continue that move from the momentum that was created last week, continue the move until they lured enough traders to take the trades, and then come in with their positions, reverse price, and now that momentum has started. So logically, right, when you think about the different phases that the market moves from, if last week was NFP data lure traders, and this week's theme was the banks come in and take the opposite side of that momentum and cause the momentum to shift, what do you think next week's theme is going to be? You know, just think logically about it. What do you think next week's theme is going to be? It's likely that we're going to see a continuation of this move to the downside. Likely. So if you were a day trader, the only thing you should be focused on is what that theme is and how you could take advantage of that theme. But then you also have to understand that there's certain risks involved with that theme playing out, because it goes against the higher time frame areas of supply that are in play and the trends, right? As we have already pointed out. If it goes against the higher time frame trends that are in play, then you know that these retracements could be short-lived. Okay? So just know that. So what we would have to watch for is we need evidence to build up so that we can see that indeed these moves are going to take place. And when that evidence starts to build up and we see that those moves are going to take place, your focus should be on short-term trades in that direction. All right. So let me see here. Let me go through some of your comments. I see the last few comments that I'm reading here. Let's see. Good morning, Kev. Good morning, Jin. Good morning, Kevin. Everybody. Finally, I made it. Allie, how are you? Remember backward. Bullish flag. Yep. Aussie is such a messy chart. It is. What's the benefits of trend lines with supply and demand? There are many benefits of trend lines with supply and demand. Many benefits. Trend lines give us a lot of information about what is taking place on the charts. Mostly how the banks are using these trend lines to facilitate moves. Because remember, trend lines are a big thing with retail traders. And so you have to understand that the banks know that retail traders are using trend lines. I mean, every book imaginable about technical analysis talks about trend lines. And so these trend lines are obviously being used by retail traders, and they're being used to increase the probability of certain trades working out. Because your average trader has no real understanding of what's really taking place in the markets, they need help to determine if price is going to go in one direction or another. So they use things like support and resistance and trend lines and all these other indicators to help determine what price is going to do. So because the banks know that retail traders are using these indicators to help them with their trading, the banks are going to use those indicators in a way that will help them to lure retail traders into taking trades that are the opposite of what the banks want to take. So knowing that, it provides a lot of information to us, okay, who want to take high probability trades for us to make a steady income and good returns for our portfolios. So they play an extremely important part. Let's see. It's still the Aussie is stronger than the euro. Do you think you can be profitable using trend lines? Oh, I know for a fact. It's not just you can't be profitable just using trend lines. No, no. You could be profitable understanding how trend lines are used, understanding supply and demand, understanding how to read the CFTC data, and understanding the logical process you have to run through when examining the charts. How to collect the data, how to analyze the data, how to figure out what is going to take place, how to figure out what themes are going to be in play, and know that you have to trade alongside those themes. And if you're not trading alongside those themes, then you'll be wiped out. If you are trading alongside those themes, then you'll do well. That's what it comes down to. I love trend lines and supply and demand. Like, do you need trend lines to know an item is at good price at Walmart? Now, why would you say something like that? Makes no sense. Would you need a trend line to know an item is at a good price at Walmart? Okay. Let's see what else we got here. Nice, Jason, but do you rake the money? Do you rake the money? Okay, Francesco. Let's see what we got here. Hi, Professor. I just couldn't miss a wrap up even during my vacation. Good man. Good man. So, yeah, your knob. I hid your messages, so nobody can read your messages anymore. You're being silly. I thought you were being serious, but now you're starting to be silly. We don't have time for that. Okay? We're serious traders. We like to talk seriously. If you feel like talking silly, then do it on another channel, not here. All right? Okay, so that's it, guys. If you have any questions, let me know what they are, and I will address them. If not, then I'll let you guys go. But if you want, I'll stick around just a little bit longer and give you guys a chance to pose some questions. I'm here, and I'll just wait. Okay? You guys can ask around about what we're seeing in the markets, about, what we expect. Let's take a quick look while I wait for your questions to come in. USCAD. See what we see. Yeah, the bullishness with the dollar. We've been talking about this for quite some time too, the USCAD being bullish, right? What else we got here? Let me see here. Yeah, see, so if I'm looking at USCAD, what am I thinking? Okay, what am I thinking? Well, I'm thinking we got areas of supply here on the 4-hour. So if I wanted to take a long, I would definitely want those areas, those obstacles to be removed, right? So can we get short-term momentum to the upside? Yeah, we could. Okay, we could get short-term momentum to the upside, but we'd want those areas of supply to be removed for higher odds. Once those areas of supply are removed, guess what? Short-term, mid-term direction is upwards. No obstacles until price gets up to that area of supply. No obstacles. So that would be midterm days and weeks potentially up. Okay, those would be the odds. So again, we're kind of seeing signs like what we were seeing with the euro. Next week's theme being a continuation of the momentum that is being created by the banks right now. So that would lead us to suspect that we're going to see a move to the upside. But if I was going to take a trade, I wouldn't want to take it on this one until those areas of supply were taken out. Because there can be a lot of resistance for price to just move up. I want to get into positions and I want it to just move. When I get in, I just want it to move. So I would be waiting for those obstacles. So I wouldn't be trading this one. If you want to take a risk, yeah, it could work. Take the risk, get in long, and watch for yourself how, these obstacles could hold price down. Doesn't mean that it's not going to go up. It just means that, for it to break through these areas would take some time. Okay. Good job, Kevin. Yeah, thanks. I appreciate it, sir. Please share how to read candle momentum. The trend is going to die out. That we could do that in another day. That would be too long to go into those details, but was in a meeting, missed most of the session. Oh, that's too bad. Well, it's recorded. Once we end the session, it'll be there. AUDUSD we covered earlier this week for next week sometime. Could we take a deeper look at the Euro US dollar 4-hour chart? Yeah, we could do that. At 10 o'clock, we're going to have a level 3 session for level 3 members. And so we'll be taking a look at the charts on a much deeper level to determine, what is going to take place, if there's any trading opportunities that we could take advantage of. But I think we did a good job covering the basics of what's to be expected. And if there's anything you guys can take from these sessions, use them to ensure you don't take losing trades. All right? Please do that. Use them to ensure you don't take losing trades. Because remember, there's a lot of traders right now that are in long euro at those highs. And because of the news that came out and was supporting going long. So, again, if there's anything you can do, just use this information to ensure that you don't take losing trades. That would be a good thing. All right? If you can do that, then you'll be in a lot better place than most traders, which, most traders are losing. Build up your knowledge, build up your understanding of how the markets work, of why they work the way they do. Do it slowly, don't rush. In the process, do not take losing trades. Do the best you can to not take losing trades. And if you do want to experiment, try with a demo account. Slowly try with a demo account, follow the themes that come into play for each week and just take experimental trades that go along with the theme of that week. Okay, if the theme of the week is euros dropping, okay, open up some short positions. If we know that based on the theme, certain charts are forecasting that either mid or short-term moves are going to be down alongside that theme, then you got to be basing your trading decisions on those charts. And just try it out with a demo account and see what your results are. Don't take trades on the news. Take trades on what we are discussing through our analysis using the Sherlock analysis process, going through all the evidence, collecting all the evidence that we can find,